Hey everyone, welcome to the video of the day. So most people think that silver is just a cheaper version of gold, something you buy when you are nervous about inflation. That's only half the story. Silver has doubled the life, and the industrial half of the story is where the real opportunity sits right now. So let's get straight into it. First of all, silver has hit $94 per ounce globally in 2026, breaking the decades of resistance. The World Bank projects an average of $70 per ounce for 26, and polling puts into roughly at $78 also. And more aggressive, if we go, forecast are seeing at $100 plus by the year end. And the driving force at 56% of all the silver demand is industrial, not jewelry, not the investment also. And the industrial demand is growing at 4.5 to 6% per year, while the mine supplies grows at just 1.2%. Over 800 million ounce, and that's not a blip, that's a structural break we are seeing in the community shortfall of silver. Three forces which are eating the silver right now would be the first three would be the first would be solar, which is essential because every solar panel needs silver pest for the connectivity, and their capacity is huge in 2026. Also, the trend is accelerating and not slowing because everyone wants solar. Second would be EVs. The conventional car use roughly 15 to 25 grams of silver, and EV use 25 to 50 grams, up to three times more than. The 14 to 50 million EVs are forecasted of production 26. That 70 to 75 million additional ounce of silver demanded just from the cars. Third, and the latest, which is AI and 5G, because data centers, semiconductors, and 5G base stations all are silver intensive. Each 5G tower use 15 to 25 gram, adding up to the solar, EVs, and AI. And you have three non-negotiable demand drivers hitting a market where 70% of silver supply is byproduct of mining other metals too. You can't just turn it on. Also, one of the bonus layer is that silver isn't just industrial, it's also monetary. Why it is monetary? Because when inflations are high, when central banks are printing, when the dollar weakens, silver historically outperforms gold in percent in chunks because it starts from a lower base, catch up very fast, very rapidly. And the silver and the gold ratio is still stretch. Gold has run hard, silver is playing catch up. For viewers into the Gulf countries and the emerging markets, silver priced in a weaker dollar means your local currency buying power stretch further on the street. Currency watch and commodity corner is into one asset. It's not a financial advice from my side, but here's the framework: physical bar, coins allocated, money accounts, the direct most exposure which we can see. Also the ETF of Silver Trust, which is the largest and the most liquid sport physical silver trust for those who want allocation of metal blacking. The miners, the first majestic silver pen, American silver, and the Wheaton precious metals was leverage exposure to silver price. And the key insight, according to reports, is that like copper and uranium, silver demand is price elastic. Solar panels and EVs remain profitable, which silver will take up to $100 plus. Industrial won't stop buying. That's very rare. So the copper, the wire, uranium, the fuel, silver, the metal powering the green revolution that nobody is watching closely enough. That's why the last 3 days were three commodities with the same story. The physical world underneath the AI energy transmission is where the structural opportunities are. Do like the video, share it with your friends, family, and colleagues. Subscribe so don't miss it. See you then. Welcome to Money Brief. Let's grow together.